All right, let's dive right in. We're talking about cross-border angel investing today. It's this incredibly exciting world where you could find the next global unicorn. But, and this is a big but, it's also packed with hidden traps if you go in unprepared.
The allure is it's powerful. You can almost picture it, right? Finding that next game-changing startup, not in Silicon Valley, but somewhere like Tel Aviv or Bangalore or maybe São Paulo. And look, this isn't just for the giant venture firms anymore. It's a very real path for savvy angel investors just like you.
Okay, but here's the reality check. With all that opportunity comes some really unique challenges. I mean, investing across borders, it takes more than just a good eye for a great idea. You need a totally different playbook to manage risks from, thousands of miles away. And that's exactly the question we're going to tackle here. So let's just break this down for a second. Investing at home, right? That's your familiar territory. You know the rules, you've got your network. It just feels like a safer bet. But then you look at cross-border investing. That's where the massive global opportunities are. You're talking specialized innovation and, yeah, potentially much higher returns. But those little question marks there, they're important. The risks are just as big.
Okay, so with all those risks we just mentioned, you might be wondering, why even bother? Why are so many smart investors looking way beyond their own backyards? Well, let's get into the why.
It really boils down to three huge strategic advantages. First up is diversification. I mean, think about it. If the US market hits a slump, a booming market in, say, Singapore could totally insulate your portfolio. Second, you get access to these incredible specialized innovation hubs. We're talking world-class cybersecurity in Israel or fintech in London. And third, you can tap into these high-growth emerging markets where you might find lower valuations but just absolutely explosive potential for returns.
But, and this is a big but, here's the single biggest challenge that affects literally everything else: information asymmetry. It's just so much harder to really check out a company when you can't, just grab coffee with someone you both know or lean on your local network. You're basically building trust from zero, and that just amplifies every single other risk we're about to talk about. So that leads us right into the nitty-gritty. Let's get real about the risks involved. We're going to break down the four main challenges that you absolutely have to wrap your head around before you even think about wiring a single dollar overseas.
First on the list, the legal labyrinth. Seriously, every single country has its own set of corporate laws, its own way of enforcing intellectual property, its own rules for protecting investors. All those things you take for granted at home, like simple shareholder rights, yeah, they might not even exist in the same way somewhere else.
So, a really common way to handle this legal maze is something called the Delaware Flip. Basically, it's a restructuring trick that makes a foreign startup look and feel just like a regular US company to an investor. But, and this is really the key insight, while that makes life way easier for you, it can create a giant tax and paperwork nightmare for the founders. You've got to understand that trade-off.
All right, next up is the tax minefield. And yeah, I'm calling it a minefield for a reason. You're not just dealing with one country's tax code here. Oh no, you've got the laws in your country, the startup's country, and maybe even a third one if there's a holding company in the mix. If you mess this up, your profits can just, poof, vanish before you ever see them.
Now, for investors in the US, there's one acronym you have to know: PFIC. It stands for Passive Foreign Investment Company. Now, this rule was created to stop people from hiding money offshore, but it has this unintended side effect. It often catches early-stage startups that are sitting on a bunch of cash from their funding round, but don't have much income yet.
So let's just cut through the jargon. What does this actually mean for you? It means the PFIC rule can hit you with brutally high tax rates and a mountain of complicated paperwork. It's the perfect example of why you simply cannot, I repeat, cannot do this without expert tax advice right from the very beginning.
Okay, on to our third major risk, currency swings. Think about it. You invest your dollars, but the startup is spending, say, Brazilian reals. And when you finally get paid out, years later, it's in their currency. Any dip in that exchange rate over time is going to take a direct bite out of your profits.
And we're not talking about small change here. The stakes are really high. A 20% drop in the value of that foreign currency, that's all it takes to turn what looked like a fantastic exit into something, well, pretty mediocre. This isn't some minor detail. It is a fundamental threat to your bottom line.
And last, but definitely not least, there's the human factor. How business gets done is just different all over the world. The way you negotiate a deal in Tokyo is nothing like how you do it in Tel Aviv. Communication styles, how much personal relationships matter, If you ignore these cultural details, you can absolutely destroy trust and sink a deal before it even gets started. Okay, wow, we've laid out a lot of risks. So the big question now is, what do we do about it? Let's pivot and talk about the solution. Building a really solid framework for doing your homework, your due diligence, on a global scale.
Your entire diligence process really needs to be built on these three pillars. And here's the key. You can't just take your domestic checklist and use it here. It won't work. Each one of these areas, market viability, technical and IP, and financial and ops, demands a totally new, locally focused perspective to get it right. So for that first pillar, market viability, you really have to dig in. Is that huge market size they're talking about actually real on the ground? You have to remember, a business model that's a home run in the US could be a total flop in Southeast Asia just because of consumer habits. You have to find the local competitors, not just the big global names. And you absolutely must confirm their sales strategy is going to work with the local culture.
Now, moving to the technical and IP side, the stakes get even higher. Why? Because intellectual property laws are completely different all over the world. This is where you absolutely need local lawyers to confirm who actually owns the IP and if there's any risk they're stepping on someone else's patents. You have to nail these issues down early.
And for the third pillar, financials and operations, you've got to be ready to adapt. Their books might not be in a format you recognize, like US GAAP. You also have to get up to speed on local labor laws, hiring, firing, all of it. And this is why having a local accountant go over their books isn't just a good idea, it's completely non-negotiable. Okay, so you've got the framework. You know what to look for. Now, what are the actual practical tools and resources you need in your toolkit to make this whole thing work?
The good news is technology is a massive help here. You've got platforms like AngelList that can connect you with deals and other investors all over the globe, opportunities you literally would never have seen otherwise. And then you have the everyday tools like Slack, Zoom, and secure data rooms. They create the backbone that lets you manage everything from diligence to relationships across any time zone.
And if you remember one thing from this, let it be this. Technology is only an enabler. It helps you shrink the distance for sure, but it can never, ever replace a trusted network of people on the ground, co-investors, lawyers, local experts. That human expertise is without a doubt your single most valuable asset.
Look, the risks of investing across borders are absolutely real, but as we've walked through, they are manageable. You just need the right strategy and, more importantly, the right team. The upside, the diversification, the access to incredible innovation, the potential for outsized returns is just too compelling to ignore. Innovation is global now. There's no turning back. So the only question left is your portfolio ready?